Hello, everyone, and welcome to Leading Indicator, a show by Public.com focused on gaining insight from the world's best macro minds. I'm your host, Kyla Scanlon. We are here with you today to discuss how Bitcoin institutional adoption can change the crypto environment as a whole. Don't forget to like, comment, and subscribe to our YouTube at Public Invest for in-depth interviews to help keep your portfolio on track. Today, we are here with Matthew Hougan, CIO at Bitwise Asset Management. Matt, welcome to Public.
Thanks for having me. I'm delighted to be here.
Yeah, so I first want to jump into the nitty gritty of it. So this ETF, this Bitcoin spot ETF that everybody's been talking about, a former BlackRock MD, Stephen Schoenfield, predicted that the approval would bring 150 million to 200 billion in inflows, or 150 to 200 billion in inflows to Bitcoin-related products over the next few years. Would you agree with that? And where do you see this impact for Bitcoin and crypto with the release of these spot ETFs, if they do end up happening?
Yeah, if we finally get a
Yeah,
spot ETF, which we've been chasing
for a
like a
long
white
time.
whale since 2013,
Mm.
I do think it will be transformational to Bitcoin and crypto as an asset class. I suspect that Steven's estimates may be on the high side. Our estimates here at Bitwise are that it could bring in $55 billion in net flows over the first 5 years. I can talk about why we think that's the number. But whether it's 50 billion or 100 billion or 150 billion, I think it will change crypto from sort of a alternative outcast idea into a mainstream idea. I think there are examples of that from the past of what ETFs have done, transforming asset classes. And I think it'll be positive for prices and positive for investors as well.
Yeah, could you talk about that $55 billion number that you all got at and where those flows could be coming from? Is it retail? Is it institutional?
Yeah, it's actually not retail. That's the amazing thing.
Gotcha.
That the incredible thing that separates crypto from almost every other asset class is that retail was the first to understand crypto and the first to move in. So it's gone from zero to $1 trillion on the back of retail investment. And today, retail investors have a lot of different ways that they can access Bitcoin, whether it's through apps or through PayPal or even in their brokerage account. But most professional investors, like financial advisors who serve retail investors or institutions, can't invest through an app, and so they're waiting for an ETF. And
Mhm.
those are the people who would buy this ETF. And that's a huge part of the market. They control about 80% of the wealth in America between institutions and financial advisors. So that's all sitting outside of crypto looking in. We arrived at the $55 trillion estimate by looking at how ETFs have done for Bitcoin in other markets, because there are already ETFs in Canada,
That's right.
in Germany, in Brazil, in Scandinavia, in other markets. And on average, they're growing to be about 1% of those ETF markets. The US market is about a $7 trillion ETF market. So 1% of that would be $70 billion. There's some money that's already in the grayscale product, which would
Mhm.
convert into an ETF. So if you subtract that, you're left with 55 billion. Importantly, that doesn't mean Bitcoin's market cap will go up 55 billion,
Mhm.
because it's not a one for one. There's a multiplier effect, all else being equal. It's a lot of money.
Yeah. And so, I mean, I used to be really big in well, not really big, but I was really interested in crypto for a while. And I think, like a lot of people, I sort of got burned by it a little. So, what would you
Mhm.
say to these financial advisors and these institutions? Like, do you think that that's going to be something that they worry about when they think about crypto?
Yeah, I think I'd answer that in two ways. One, a lot of people got burned because there were bad actors in the space. There were FTXs.
Sure.
There were a lot of scams and fraudsters. We think we're entering the sort of mainstream era of crypto. A spot Bitcoin ETF would be a calling card for that. But I'd point to a couple other examples. You take Larry Fink, the
Mhm.
CEO of BlackRock, who in 2017 called Bitcoin a index for money laundering. Today calls it a potentially transformational currency that could transcend all other currencies and revolutionize finance. There's been a lot of regulatory progress, custody progress, et cetera. So it's a safer space today. If you were burned by that, you should still be careful, but it has improved. The other thing I would point to is it's a long term investment. The sort of irony about crypto is there's so much minute by minute trading coverage, and there's so much minute by minute crypto news, and people can
Yeah.
get hyper focused on what happened today versus yesterday. But that's not why you should be investing in crypto. If you're investing in crypto, you're making a bet that 5 or 10 years from now, this is going to be part of the mainstream. And investors who have taken a 5 or 10 year, multi-year look at Bitcoin have all been rewarded. There's actually never been a 3 year period where adding crypto to a portfolio and rebalancing didn't boost your returns in the history of crypto. It's just if you're making a short-term trade, I have no idea where Bitcoin's going to go in the next month. Next 3 years, I'm fairly optimistic about where we're going.
Sure. And when we think about crypto adoption, part of the issue that the SEC is having with regulation is they're like, we don't really know what this is. Like, is it a commodity? What is it? Is it an asset? So when you think about crypto adoption, do you see it more as an investable tool, or do you see it more as a tool that people actually use in the day to day?
Yeah, both, but in different ways. You actually have to get a little bit more specific on crypto. When I think of Bitcoin, Bitcoin is a monetary tool. All the Bitcoin blockchain is good at as a piece of software is holding and storing wealth. You can't program it really to do much beyond that. And so it's a monetary tool. I think of it as an asset that's aspiring to be digital gold, but you could call it the pet rock of crypto, and I wouldn't disagree. If you take Ethereum, Ethereum can be programmed like software. So if you want to build a decentralized version of the New York Stock Exchange, you can build it on Ethereum. And there are lots of real world use cases bubbling up in the Ethereum ecosystem. Nike did $200 million in digital goods revenue. Just this week, UBS launched a program called UBS Tokenize to tokenize real world assets on the Ethereum blockchain. So Ethereum is this useful global supercomputing platform. Bitcoin is like digital gold. Gold doesn't do much either. And so the answer to your question is both. It's both a monetary asset that's an investment vehicle, and it's a useful technology, a new type of computing platform, just like mobile was, or the internet was, or cloud was in the past.
Yeah. And I think part of the issue with crypto, or not the issue, but the things that happen with crypto, right, is that there were so many parts to invest in. So, like, you could do Solana, you could do Dogecoin. Do you really think it's going to be like, not investment advice, right, but like Bitcoin and Ethereum are going to take helm for these institutional investors?
Yeah, I think of it a little bit like I think about the software space, Kyla. Like in the software space, there's Microsoft and there's Oracle and there's Salesforce, and then there are a bunch of startups. And every once in a while, we get a Slack or a Snowflake or something, but most startups fail. The same thing is going to be true in crypto,
Sure.
right? A blockchain is just a piece of software. And there are two giant ones that cover two giant use cases: monetary goods on Bitcoin, Ethereum on programmable computing. And those have massive network effects and real leadership. Does that mean nothing else will bubble up? I don't think so.
Mhm.
Every once in a while, we'll get a Snowflake or a Slack that'll emerge and be important. I think that'll happen in crypto as well. But are those the two safest? Yes. Are they the two most regulated? Yes. Are they the ones where they're futures and ETFs and a stronger regulatory consideration where the SEC and the CFTC aren't bickering about it? Absolutely. And if you own those, you own 70% of the market cap in crypto.
Yeah.
I think you've checked the box. Are you going to be the number one crypto investor over the next 100 years? Obviously not, but you're going to do well enough. It's like the S&P 500 for crypto.
Hmm. Yeah. And Bitwise just recently released some research talking about, incorporating Bitcoin into the 60/40 portfolio. Could you talk about that? How investors could think about incorporating crypto if they haven't already?
Yeah, what we looked at is what happens if you add 1, 2.5, or 5% allocation to Bitcoin into a traditional portfolio of stocks and bonds. And what you'll find is historically, no matter what period you look at, as long as you rebalance, it's tremendously boosted your absolute and your risk adjusted returns. The thing people find surprising about that is it did it without boosting the volatility
Hmm.
very much at all. And people are always curious because Bitcoin is so volatile
Right.
itself, but it moves to a different drummer than stocks and bonds. So when you add a non-correlated asset to a traditional portfolio, you can get those enhanced risk-adjusted returns without adding more risk. A few keys and caveats there, and of course, as you said, not investment advice. We stopped at 5% because above that, you really do start to see significantly increased volatility in crypto.
Mhm.
We recommend people shouldn't invest more in crypto than they can afford to lose. It still is a speculative, volatile asset class. And the second piece is you have to rebalance. So you have to look at your allocation on a quarterly or monthly or annual basis and recalibrate it. If Bitcoin's gone up a lot, you're probably going to have to sell it. If it's gone down, maybe you consider, at least in our study, consider allocating again. And I think those are important features that are sometimes overlooked by people who just want to get into crypto and hold it without regard to its place in a portfolio.
Mhm. Yes, I think that that's the portfolio management aspect is I think is always pretty difficult. And looking forward to, the Ethereum ecosystem, Ethereum is the internet of crypto, as you've been talking about. How have you seen the Ether ecosystem develop and behave during this 2023 trading year, which has been pretty volatile?
Yeah, it has been volatile. Underneath the surface, if you look at sort of the people who are building applications on Ethereum, I think the level of excitement is higher than ever. You're seeing
Mhm.
venture capital firms actually succeed in doing fundraising for projects linked to crypto, new firms launching. You're seeing developer conferences be packed to the gills. It reminds me a lot of 2019 when the whole world was tired of crypto and no one wanted to talk about it, but crypto was coming up with some major innovations like stablecoins and NFTs and DeFi, which blossomed in 2020 and 2021. What I'm seeing underneath the surface is similar sorts of trends. That doesn't guarantee we're going to get the kind of breakout success we got in 2020 with sort of DeFi summer and the boom and excitement around that.
Yeah.
But the preconditions are there. All that said, user activity is still relatively low. It hasn't recovered. This is sort of the hangover from the bear market of 2022. I think we're in a new bull market. It's worth noting crypto is the best performing asset class in the world this year. Bitcoin up about 68%, Ethereum also doing well,
Huh.
but it hasn't yet sort of caught fire as it did in 2020, 2021.
And there's this correlation between tech and crypto. Could you unpack that a little bit? Is crypto moving because tech is moving, but tech isn't doing that well? Could you just talk about that relationship, the Nasdaq?
Yeah, absolutely. There was a period of time when the Fed was doing aggressive QE and interest rates were zero, where crypto and tech were very highly correlated. And that was the most extreme monetary policy period of our
Oh
lifetimes, right?
boy, yeah.
Everything
Mhm.
was trading as one. Tesla wasn't trading based on the number of cars it was selling. It was trading based on what Jerome Powell had for breakfast. And so everything was moving together. That's no longer true. So the correlation of Ethereum to the NASDAQ 100s or the leading tech index is actually below 0.25 right now, which is almost statistically very low, which means it moves to a different drummer. And again, that means it can be a nice thing to add to a technology portfolio. I would, in fact, go as far as to say that if you have a sort of disruptive tech portfolio, if you're in the Kathy Wood, the AI, the NVIDIA camp, and you don't have a small allocation to Ethereum, you're missing a big chunk of what's exciting in the technology space. You're missing a big chunk about what leading venture capitalists are thinking about. There is some real traction in the Ethereum ecosystem. I think it belongs in the technology portfolio.
Hmm. And this is sort of, I guess, tangential, but is Ethereum using AI at all? Is that being incorporated into the crypto space? Because that's sort of the next big thing. Like crypto was that, and now AI is it. Do you see the two interconnected at all?
AI is the hot dot. Yeah,
Yeah.
there's this expectation that as AI becomes more autonomous, it will need its own currency. It will need a digital currency. That digital currency is likely to move over blockchain rails. Whether it's Ethereum itself or stable coins, we don't know. But that's all. Just to be clear, that's all future state as
Speculation.
opposed to what we're seeing right now.
Yeah, exactly. And you mentioned Kathy Wood, and she filed for an Ethereum ETF. Do you see that happening, considering all the friction that's been with the Bitcoin spot ETF?
Yeah, I think we've entered the ETF era of crypto.
Nice.
I know we've been trying for a long time, but we had no crypto ETFs until 2021. Then we got Bitcoin futures ETFs. We got crypto equity ETFs. Just this week, we got Ethereum futures ETFs. I think we're going to probably get spot Bitcoin, and then that would mean we would probably get spot Ethereum. It's a long way from that to other
Mm,
crypto assets,
sure.
to Solana and XRP, et cetera. That's a different bridge. But yeah, I think that's within gameplay. I think it's going to be normalized through ETFs in the same way that gold was normalized through ETFs back in 2004.
Hmm. And what do you think the SEC is waiting on? Is it just them dragging their feet for a certain reason? I know there's all sorts of speculation about why they're doing what they're doing, but what do you think is taking so long?
There is all sorts of speculation. To their credit, when the first crypto ETF was filed in 2013, crypto really wasn't ready for it.
Yeah.
There was no custodians, the trading ecosystem. They were right to reject it then. I think they're just waiting to get further over the line. I actually, sorry to go a little deep on this. I've thought a lot about this.
Sure.
I think there's anchoring bias because they first associated it with the negative activity that took place in the early days of crypto. They're anchored on crypto being dangerous or riskier than it is. When crypto today, Fidelity provides custody for crypto. Jane Street is trading crypto. It's actually fairly mainstream. It's just when you have that anchoring bias, you don't have to just convince people to the 51%. You have to convince them to the 90th percent. And that's where the industry has been going. Now, I think we're close. BlackRock is coming in. We have these surveillance agreements. We're submitting research. I think we're getting over the line. But I think that anchoring provides some of the answer to why it's been slower than many people like myself would have wished.
And when you talk about the anchoring, you're talking about the money laundering and some of the illegal activities that happened with crypto. And of course, SBF is on trial right now. FTX blew up and the whole Michael Lewis situation with his book. Do you feel like that is going to be something that sets crypto back more? Or do you think people are able to separate FTX from the crypto ecosystem?
Yeah, great question. I think it set us back when it first happened, even though actually crypto prices bottomed right around
Yeah.
then. But when we were having conversations with investors in January and February, they wanted to talk about FTX and Sam Bankman Fried. Those actually ground to a complete halt almost the day that BlackRock filed. I think if you have the largest asset manager in the world who's traditionally very conservative saying Bitcoin is going to be part of our future and we're going to build products around it, and the CEO going on Fox and saying it could revolutionize finance, I think that dwarfs the sort of lurid leftover spectacle of the SBF trial. And I actually think that is old news. It's worth
Mm,
noting if you look at the history of crypto, we've had a number of events that have been negative, right? They
yes.
closed Silk Road, which was an illegal marketplace. They shut down ICOs. But sort
Yeah.
of after those events, after the air cleared, we got big bull markets after Mt. Gox
Mhm.
and Silk Road, we got Ethereum. After the ICO collapse, we got DeFi and stablecoins and NFTs. Sometimes you have to prune the dead wood to let things blossom. And I think that's happening a bit with FTX
Yeah.
as well.
Yeah, a lot of my friends work in crypto and I'm super impressed with the tenacity and like the ideas that they have. Like I feel like with traditional finance, there's one way to do stuff and that's it. But crypto seems to think about things differently. Like there's always innovation as top of mind. Do you find that working in the industry as well?
It's absolutely true. And as you know, the traditional financial industry is just pretty terrible, right? People don't think about it that much, but money is the slowest moving thing in today's society. I could get an elephant delivered from Amazon in an hour, but if I want to wire money to London, it'll
Yeah.
take 2 business days. Bonds settle in 5 days. Personal loans settle in like 30 days. What century is this? So I do think crypto is right to think that this area is ripe for disruption. It hasn't been disrupted. What's the largest financial services company? It's JP Morgan. It was founded in the 1700s. What kind of industry is still led by a company founded 300 years ago? I think the market is ripe for disruption, and that's why crypto sees the opportunity, but it's not easy, which is why it's taking a while. We'll get there though.
Yeah, and two more questions, and then I'll let you
Yeah.
free. But I'm curious with the CBDC. The Federal Reserve released FedNow, which is their instant payments thing, and everyone's like, oh, they're going to attach a CBDC to it. Do you see the federal government adopting some sort of CBDC in the future? Or do you think that it's just a little slow and that won't happen for a while?
I think it'll happen abroad. I think there's a big pushback in the US against CBDCs because it does raise significant financial privacy
Totally.
concerns. Ultimately, I think a digital version of the currency is inevitable and we will get there, but I think the US will lag behind and I think that's okay. At the same time, I think we're liable to see growth in stable coins, which is sort of
Hmm.
crypto versions, almost like money market funds on crypto blockchains being used for payments. I actually expect we'll see that before we see a public central bank digital currency just because of those financial privacy concerns.
Yeah, yeah, that's the thing that everybody seems worried about. It's like they're spying on me, and they're probably already
Yes,
spying on us, But
almost certainly.
yeah.
Almost certainly.
So I'm curious, as the final question, what's your general market outlook? Like crypto has been through a lot in the past 2 years or so. And what do you think is going to happen over the next 6 months or a year?
Yeah, we think we're in a new major bull market cycle. Crypto has historically moved in these 4 year cycles, not tied to the Bitcoin halving. That's a piece of fake news, but actually tied to major breakthroughs. The last one was 2019, three big up years to 2022, and the pullback. We think we're in a new major bull market cycle. So we're very optimistic about where we're going from here. We think the catalyst to look forward to are potential spot Bitcoin ETF, potential Ethereum Bitcoin, spot ETF, progress on crypto legislation, which I actually think is more likely than many people expect, and major asset managers coming into the space. So from where I sit, very optimistic. But of course, it will be volatile. It always has been.
Yeah. Awesome. Thank you so much, Matt. This has been great.
Thank you.